Hello, everyone, and thank you for joining us today. My name is Kimberly Weisul, and I'm an editor-at-large at Inc. I'll be your moderator for today's National Small Business Town Hall. It's the fourth in a series of weekly town halls designed to help business owners get through the coronavirus crisis. At Inc., we are always looking for ways to support entrepreneurs, and one way we've been doing that is with our ongoing coverage of the stimulus package and what it means for business owners. I'm so pleased that today we're partnering with another champion of small business, the U.S. Chambers of Commerce. I'll be joined by Neil Bradley, the Executive Vice President and Chief Policy Officer at the Chamber. After my conversation with Neil, we'll be taking your questions, and I'll be introducing a panel of experts to help answer them. We typically get hundreds or even thousands of questions at these events, but we have a moderator working behind the scenes to make sure the questions with the most likes get to the top of the list. So even if we're not able to answer your particular question, we hope we will answer one that will be helpful to you. Before we get started, I'd like to thank Salesforce for underwriting today's town hall and the information we're bringing to you. For those of you who are not familiar with Neil Bradley, he has over 2 decades of experience working directly with high-level policymakers. At the Chamber, as the Executive Vice President and Chief Policy Officer, he is responsible for aligning the Chamber's overall policy priorities and advocacy efforts. Welcome, Neil.
Good afternoon, Kimberly. It's good to join you again.
It's good to be speaking with you. We have a lot to talk about today. We have spent a lot of time on these town halls talking about the Paycheck Protection Plan. For those who may be joining us for the first time and are new to all this, could you please just sum up that plan in 2 or 3 sentences?
Sure. It's a loan program that's available to businesses with generally fewer than 500 employees, also available to sole proprietors and independent contractors and the self-employed. And you can get a loan equal to about 2.5 months of your payroll. And this is the great thing about this program. If you use the loan proceeds to pay for your employees or to support yourself as an independent contractor, you can have the loan forgiven.
All right, so this sounds good. The stimulus package was passed 3 weeks ago. And importantly, this program, which is the cornerstone of the stimulus bill's small business relief, is out of money. Yet very few business owners have actually seen that money flow through to their bank accounts. So if you haven't applied for a paycheck protection loan yet, and you think it would help your business, what should you do?
Well, you should still be reaching out to lenders to inquire if they're still accepting applications. We're in a momentary pause. We expect Congress to restore money. They're currently negotiating right now about a restoration, another $250 billion for the Paycheck Protection Program. The good news is that no one disagrees about funding the PPP program. Republicans and Democrats all agree. They're arguing about other things that might be attached to that funding. That's delayed getting it done. We think it'll still get done early next week. But in the meantime, most of the lenders we've talked to are continuing to accept applications on the part of small businesses. So if you're interested, if this was something you were planning to do today, go ahead and reach out to that lender and start the process.
Okay. So we are hearing from Treasury, of course, that this money has been spoken for, but as we know, most small business owners, even those who've been approved, haven't seen the money yet. So what can you do to find out what's going on with your loan application if you have submitted one already?
So if you've submitted one already, there's 2 steps in the approval process. The first step in the approval process is that the lending institution that you worked with has approved your application. Once they do that, once the lender approves your application, they turn around and they submit an application to the Small Business Administration. The Small Business Administration does a couple quick checks, making sure that you didn't already get a loan, for example, from somewhere else, and they send back to that financial institution, that bank, a distinct loan number. Once that occurs, you have money. So if you're in the approval process where you're just in the first step, then you're going to have to wait until the funds are replenished by Congress. If you've already gotten that loan origination number from the Small Business Administration, if your lender has that, you are part of that $349 billion, and you should be getting your loan dispersed. So the things to check on are, where are you in that approval process? And that's a great question to ask your lender.
So what parts of this, if any, are still running now? Like, are banks still processing applications and sending them to the SBA where they end, or are the banks not even sending them forward right now?
So the SBA and Treasury announced this morning that they are no longer, at this moment, accepting the incoming applications from banks and financial institutions. The financial institutions, it's up to them whether they want to continue accepting applications and basically getting them ready to submit when the program reopens. But most of the ones we've talked to are continuing to accept applications as a financial institution.
So one of the hurdles for business owners with this program has been that if they don't already have a relationship with a bank, and especially if they didn't already have some kind of loan, the bank was not necessarily going to take their application because they were so overwhelmed. So this is an area where some of the online lenders thought that they could play. At the end of the week, we started to see them getting more active. So does it make sense to send your application to an online lender who may not be approved yet to make these loans?
Well, you only want to send an application to a lender who's been approved to make the loan. So those should be the only people who are accepting loan applications, is someone who's been approved by the Treasury Department to be a participant in this program. So there are, as you mentioned, some online lenders who have already been approved. So if you're working with one of those and they're continuing to accept applications, that's fine. I would not submit applications to someone who hasn't been approved as a lender yet, because that's just another added step in that process. They have to get approved before they can even submit your loan to the SBA.
What about folks who are not approved themselves, but they have a partner bank that they say they're working with? Is that something that is going to be functional, do you think?
Yes. So, and for some of these online fintech companies, they are working with partner banks, and the partner banks kind of provide the support and the structure and the approval process for that. So if you're working with an online lender who has a partner and they've been approved to accept applications, then they're good to go.
Okay. So one of the things that we've seen with the Paycheck Protection Program is that it's announced, and then there are changes weekly of how it's going to be administered. Assuming that we get more money for this, do you think the rules are going to be the same next week if we get it next week, or do you expect to see them change?
Well, I mean, Congress always reserves the right to change its mind, unfortunately. But I do anticipate that the rules will be largely the same. And so I don't anticipate brand new rules. I certainly don't anticipate any rules that would restrict someone's eligibility. So if you think about most of the rules changes that we've had going so far, kind of from the beginning to now, in most instances, they've enlarged eligibility, made people who weren't eligible before more eligible. So I'm not particularly concerned that someone who is eligible today will somehow find a rules change that makes them ineligible in the future.
Great. Another thing that happened this week is that we got a little bit more guidance for independent contractors and 1099s as how they should calculate their income for this Paycheck Protection Program. What should they be doing?
So great question. You know, when we gathered last Friday, we were guessing as to what the rules would be. Turns out we were pretty good guessers, because the guidance that was released by the Treasury Department very much mirrored what we were discussing. And so the easiest way to simplify it is that if you're an independent contractor, you want to have your 2019 1040 Schedule C. And if you haven't already filed your 2019 taxes, the first thing you need to do is go ahead and fill out that form. You don't necessarily have to file that tax form with the IRS, but you're going to need the information that's on that line 31 on that Schedule C so that you can know how much you can receive in a loan. We put together a guide at the U.S. Chamber just for independent contractors that walks through step by step how to calculate your loan amount and how importantly your loan forgiveness is going to be considered, so that you can begin planning both for getting the loan and for making sure that you maximize your loan forgiveness.
So can you give us a few tips on that forgiveness before we move on to the EIDL program?
Yeah, so the most important thing is similar to regular employees. It is both wages, or the compensation that you pay yourself, and also business-related expenses such as rent, utilities, mortgage interest. But here's the thing that I think a lot of independent contractors are going to want to think about. Most independent contractors do not have those type of business expenses that they claim as deductions on their 1040. And if you don't claim mortgage interest or rent or utilities as a deduction already, you can't start now and get that benefit. So what your universe of loan forgiveness is going to be what you compensate yourself over those 8 weeks. And that has to be the same as the pro rata 850 seconds that you compensated yourself in 2019. And so remembering that you can borrow 2.5 months, but you only get forgiveness for 8 weeks, you can have a situation in which you borrow a little bit more than you can get forgiven for if you do both to the maximum.
Okay, thank you. And that's crazy. I appreciate your insight. And if we need, I think, more details on that, we'll be turning to one of our panelists later on in this session. I want to ask you about the economic injury disaster loans, which we're calling EIDLs from the acronym. They, like the PPP, have basically run out of money, but unlike the PPP, there doesn't seem to be a lot of impetus to add funding to that program. Is that basically over?
I don't think it's over. You're right. It's not the center of the discussions in Washington, but I suspect that if not on the Monday round, very soon that the EIDL program gets additional funding as well. So I think a lot of policymakers are just waking up to the realization that a lot of small businesses who maybe aren't heavy with respect to payroll need the EIDL program to be able to bridge and pay for other expenses. So I think that program's coming back. I think Congress will replenish it. It just may take a little bit longer than the replenishment of PPP. Stay tuned. I think we'll have more on this, particularly early next week.
And that program, which started off as a $10,000 advance, has moved to $1,000 per employee. Is there any chance of it going back to the $10,000 advance, do you think?
It is, depending on how much money Congress puts back into it. And so if they put enough money back into it, and they can increase the amount of the awards. Importantly, to your point about the program running out of money, this morning it was announced that they are no longer processing EIDL applications at the SBA either. So that's one of those programs that you can only get by applying through the SBA. And so at the moment, that program is shut down to new applicants.
Right. Okay. Thank you. Another new program that has come online, I believe just this week, is the Main Street Lending Program. We've heard about it, but now it's here. That is for more established businesses, and the minimum loan size is $1 million. There's not forgiveness here. This is more of an effort just to loosen credit. Who is eligible for that?
So this is a program. It was announced this week, but the final rules have not been made, have not been released, and the program actually isn't available to make loans yet. So we expect that to happen by around the end of the month, May 1st. So this is a program created by the Treasury and the Federal Reserve. Essentially, what they're doing is making it easier for banks to lend to businesses with fewer than 10,000 employees. And so these are businesses that are already in existence. They are generally have a credit relationship with a bank. They can evaluate their credit worthiness. There are certain EBITDA tests with respect to earnings that you have to satisfy. We are working at the U.S. Chamber, and I think this may in fact happen, that $1 million minimum loan is actually going to come down, which will make this program more available to more small businesses. So I think we're going to know a lot more about this program, maybe even by the time we get together next week. Importantly, this program is something that you can combine with PPP. So if you're one of those businesses who took out a PPP loan and you're wondering about how you're going to bridge in the future, this will be an important aspect, another source of financing as we head into the summer and we get into reopening.
Excellent. Thank you. And thank you for clarifying the status of that. I appreciate it. As you mentioned, the comment period just ended last night. Can we talk a little bit about the terms of these loans, just as we know it to be now, like just so people can prepare, even though we know that it could change?
So it's generally a 4-year loan. There's an interest rate range. It's in part based on the overnight lending costs for the Federal Reserve, plus an additional amount there. There are some requirements with respect to a business who takes the loan in terms of certain restrictions on expenditures. They have to make a good faith commitment that they're going to try as much as practically possible to preserve employment. But it generally looks a lot like traditional loans in that respect. So there are a few bells and whistles tied to it because it's a government program, but it looks more like a traditional loan.
Excellent. And before we turn to our panel, Neil, I want to ask you a question about the Paycheck Protection Program that we at Inc. are getting all the time. I know it's going to come up in our Q&A today about the timing of the 60-day debt forgiveness period, because this has to do with sort of the purpose of the program. So the question that we're getting is, can you talk about what amount of leeway business owners have in timing the start of their paycheck protection loan if they do get one?
So the short answer is you don't have much leeway at all. And so the way the program is set up, it is designed, the purpose was to help small businesses continue to pay their employees even during a time in which the business was shut down. This was viewed as an alternative to small businesses having to lay off employees and put them on unemployment. So your 8 weeks, your 60 days begins when that loan is originated and dispersed to you. There can be a little bit of lag time, but not more than 10 days between loan approval and the actual disbursement and the start of that 60-day or 8-week clock. But there's no parameters to say, I've gotten my loan, I'm still shut down, I would like to wait 2 weeks to start my 8-week clock. You cannot do that. The statute says it starts on origination and the 8 weeks runs immediately after that.
Great, thank you very much. So I'd like to turn to our panel now. I'm first going to introduce Marilyn Landis. She is the president and CEO of Basic Business Concepts. Welcome, Marilyn.
Thank you. Good to be with you all again. Thank you.
So, Marilyn, with governors joining together to coordinate the eventual reopening of the economy, it looks like any kind of return to a new normal is going to happen on a regional basis, not necessarily a national one. So how does that change the way that business owners should think about reopening their own businesses?
Kimberly, your question is extremely timely. Many businesses are thinking about this now. You know, those who didn't get an EIDL loan or a payroll protection loan, they're going to have to find other sources to meet the recovery challenge. And even if they ultimately are able to get back in the queue next week, as Neil had said, they may be getting funds before they are reopening. So they've got a lot of challenges to regrow and recovery, especially going to be difficult if it's regional pockets that are opening and opening with different rules. You know, they're going to determine how they're going to fund their supply chain of their vendors, particularly if the vendors aren't open yet. Their state might be open, another region might not be open, or they may never open again. So they may have to go out to find new vendors, and that might be COD. So that's a whole new cash need. You know, your customers may not be able to travel to you. You might be able to open your doors, but they can't come to you. This might be truer in smaller states. So you may have to incur costs for shipping or warehouse fulfillment if you want to continue to keep those customers, that they don't go somewhere else. If your employees maybe they can get to one location because that's open, but they can't get to all of your locations. So how are you going to fund that work? Vendors may or may not be open. So if the vendors are open, they're going to be expecting payment and you might still be in lockdown. So you're going to have to deal with those issues. You know, the key is finding the capital to stretch your company to your customers, in many cases across the valleys that aren't open yet. You know, the big difficulty will remain being competitive with your company. How are you going to find the cash to do that? Particularly if your competitors are open and you're still under lockdown. You're going to have to find ways to fund this, which goes beyond your payroll. So all this is going to take cash. And since everyone has gone through this, credit may be scarce. You may not be able to borrow from your vendors or your customers. So it's time to switch to a survival mode. The rescue boats have hit some stormy water and they've had to go back to the shore, and we're hoping they'll replenish and come get us. But in the meantime, we've got to start thinking about how do we plan for the spotty, sporadic opening and how we reach across to our vendors, our customers, and our employees to begin to function again.
Thank you so much, Marilyn. And that is to think about, but thank you for outlining that for us. Next, I'd like to welcome David Barron. He is a member of the law firm Cozen O'Connor. Thank you so much for joining us.
Thanks, good to be here.
So David, what if you as a business owner are ready and able to reopen, but your employees do not want to come back, either because they're worried about their health or for some other reason?
Yeah, that's a big issue right now. And I think there's really two things going on here. One is the generous unemployment, the extra $600 from the federal government that's going to be there through July. And many employees are just, not wanting to come back when they can make more money on unemployment. I think the answer there is health insurance. Many employers who have furloughed employees have kept those employees on their health insurance, and the sort of the carrot and the stick of being able to say, look, if you don't come back to work, then we're going to have to let you go and you may lose your health insurance. So I think that's driving a lot of the decisions out there. I think the tougher question is for those who have a arguably legitimate reason why they don't want to come back to work. Maybe it's a health issue, maybe they're older. I think that issue became more complicated in light of the announcement yesterday with the plan to get back to work, which specifically says in these various phases that the federal government is recommending that elderly and those with underlying health conditions continue to shelter in place. So again, employers have obligations potentially to reasonably accommodate employees with disabilities. That might include giving them a leave of absence. So that's going to be a really tricky issue. And then employers are also worried that they bring employees back and then they immediately take advantage of the Families First paid leave. So again, I think that's something that employers are going to have to be wrestling with, looking at, are they exempt depending on their size, are they under 50, and just being prepared that when they bring employees back, some of those employees might very quickly then decide to move from unemployment over to paid leave.
All right, thank you very much, David. Next, we are joined by Dan Martini. He is the Vice President of Congressional Relations and Public Policy for the American Bankers Association. Thanks so much for joining us.
Yeah, thanks for having me back again. Really appreciate it.
Our pleasure. So, Dan, I feel compelled to ask you the question every business owner is asking their banker, and many are asking us at Inc. Why is this taking so long? What's going on?
Sure. So first, I want to state that the banks are there for their customers. They are working most times around the clock, 24/7, 7 days a week, uploading loans into the system, and now working on the backlog to fund and close. But as some people may know, but many may not, is that the SBA in a good year only does about 25 to 30 billion in loans, and that process usually takes months for each individual loan. They have been tasked with doing $350 billion in loans, and they did that in under 14 days. And the closing, as you heard earlier from Neil, has to take about 10 days or less. So banks are taking applications as fast as they can. They are uploading them, or were uploading them, into the E-Tran SBA system as quickly as possible. And now you'll start to see a lot of these loans that were processed and approved begin to be closed now that they've received the appropriate guidance from SBA on how to do so, which didn't come out until very late last week.
Great, thank you very much. And also on our panel, we have Manny Cosme. He is the President and CEO of CFO Services Group. Welcome, Manny.
Hi, thanks for having me back. I appreciate it. Missed you all last week.
It's great to see you again. Thank you. So, Marilyn was talking about survival mode and cash. So with the Paycheck Protection Program temporarily out of funds, and even many approved business owners not seeing their money yet, where should business owners look first to conserve cash?
Yeah, that's a great question, and one that we've definitely been getting for sure. So I know that typically for a small business, when you think of a cash crunch, the first thing you want to do is start making cuts. And while that can be an appropriate strategy, I do just want to caution everyone before you make cuts to run that through your financial projections, because just keep in mind that every cut that you make is going to cut your ability to generate revenue or keep your business going, which is not something you want to be doing right now. So before you make that cut, run it through your financial projections and really think about how that's going to impact your business. Will it be a detriment to your overall operation or your ability to make money? Right now, we all need to be focused. I know these federal programs are great. They're providing some, the idea was quick money right now to kind of get us to over this hump, to kind of bridge this gap. But keep in mind that these were meant as a bridge. We really need to be thinking about how we're going to grow our way out of this situation ultimately. So making cuts will harm your ability to do that. So before you do, just run it through your financial projections to make sure that it's going to ultimately be beneficial to you.
Excellent. Manny, thank you very much for that guidance. Appreciate it. We are going to go to our audience questions now. I'm going to start with Neil. Neil, this is a question about the Paycheck Protection Program, and I think it's ground we've covered before, but the fact that 97 people are asking it means that we still have a lot of confusion. It says, hi from Oklahoma. Hi. As a small business owner, I am still confused how we will pay for rent, utilities, etc. when the amount of my Paycheck Protection Program loan has to be dedicated 75% for employees. The balance remaining will not cover rent. And rent is a huge issue that we're seeing more people struggle with.
No, that's exactly right. And hello from a fellow Okie to the questioner there. I'm a good Sepulpa boy, but you're exactly right. No matter where you are, if it's Oklahoma or anywhere else, there's difficulty with the other expenses. And so that's why, in part, these loans have to layer over each other. It's difficult to talk about now, especially since both the PPP and the EIDL loan programs are shut down. But when both are open, you should think about how you might be able to maximize both of those. The PPP, which can help you with those payroll costs, and the EIDL loan, which can help you with some of those other fixed costs that the PPP can't cover. And so you're right. The way Congress designed this with this rule that was implemented by Treasury on 75-25 does kind of create those problems. And as an alternative, remember that while 75% is the importance for maximizing your loan forgiveness, if for some reason you don't maximize your loan forgiveness, it's still just a loan, and it's 6 months of deferred payment, and it's a 1% interest rate for 2 years. And so while not ideal, that is an option that is available to small business borrowers, which is to simply decide not to maximize that loan forgiveness amount because of other expenses that you have, and recognize that you'll pay it back at a 1% interest rate over 2 years.
Yeah. Thank you. This is another question about the use of those PPP proceeds. It says, if my company is behind on rent and utilities, can I use my PPP loan to catch up and stay current, or will the 8-week period following origination be tightly scrutinized when it comes to loan forgiveness? And Dan, maybe you can also chime in on loan forgiveness. So Neil, do you want to start on that?
Well, they are going to look at, you are going to provide documentation about your payments in that 8-week window. I don't know that there's great clarity that if you are paying an overdue bill, that they would somehow they would say that that is not an acceptable expense. I think much more worrying will be the fact that only 25% of your overall loan forgiveness amount can fall into that category of utilities, rent, and interest.
Yeah, and related to that as well, that area of loan forgiveness, as we've seen with SBA and Treasury releasing guidance, they've sort of done it as the process moves along in the loan. So you had application guidance, then closing guidance. We will probably see loan forgiveness guidance coming in the next week or so, if I had to guess.
Excellent. Thank you so much. This is a forward-looking question that asks, since the SBA loans and PPP, I think, have run out of money, what is the plan to support all of the organizations that need funds and couldn't get them in the first wave? So obviously we're looking at more funding specifically in a second wave, but is there hope beyond that, Neil?
Well, I mean, we have to get these programs replenished. That's the bottom line, right? Yes, there are other things available. There are a lot. We've talked to a lot of states who've set up programs to assist small businesses. Some localities have. But in terms of the scale of what we need, there is nothing that compares to the scale of another $250 billion for this program. We just simply have to get it refunded.
Neil, do you think that 250 billion is, I know this sounds crazy, is enough? I mean, there are some economists saying that we'll need a total of $1 trillion. I have no idea how reasonable that is. What are your thoughts on it?
I don't think we know. So I think 250 gets us a good way further. If you look at the average loan amount, we expect as more applications are processed, that average loan amount will come down, particularly as we begin thinking about independent contractors and the self-employed taking advantage. The thing that we're suggesting at the U.S. Chamber is we know we need 250 now, and we need to evaluate where we are going forward, whether we need to replenish it again. But let's get this 250 done yesterday because we needed it yesterday.
Yeah, absolutely. Manny, you had a comment on use of proceeds?
Yeah, well, I just wanted to also throw out there that just keep in mind that the PPP and the EIDL were not the only things that people are eligible for. And that's something over the last 24 hours we've been reminding all the people that we're working with, is that there are other things that you can take advantage of. Besides, first of all, besides federal programs, there are state and local and now private programs that are available. For example, Facebook, I know, just rolled out their program. So there are state, local, and private programs available. And also, even on the federal level within the CARES Act, there's still things like the employee retention program that you can take advantage of, the payroll tax deferral. So just keep in mind that the PPP and the EIDL were not the end all be all.
Excellent. And Marilyn, I think you had wanted to chime in on that as well.
Yes, one is to echo everything that Manny has said. He's right on track. The thing is, I think we've been so fixated because we were told it was first come, first serve for the EIDL and the payroll protection. Everybody was fixed on that first. Going forward, they need to look into their community. As Manny said, many states are doing things. Local economic development groups are doing things. They are getting funding from various sources to support their local economy. Many landlords groups are coming together to try to provide some ease for their tenants because they want those buildings occupied again when it's over. So it's time to start looking around. I know everybody's overwhelmed right now, but looking locally for those things either in their industry or in their immediate area. The Treasury also licenses CDFIs, and many of your economic development groups have those. They're excellent, and they're getting funding and guidance out of Treasury. So don't be so fixated on PP and think it's over. There's also alternative lending options that are out there that are good and they're safe that you can look at. So figure out what you need and don't despair that you didn't get payroll money if you didn't need 75% for your payroll, and start looking for those other things that better fit what you need.
And I would be remiss if I didn't mention a good place to start is yesterday my colleagues at the U.S. Chamber Foundation announced a grant program for businesses with 3 to 20 employees in distressed communities. Just Google U.S. Chamber Foundation and you can get the information about how you can apply for that grant program.
Okay, excellent. Thank you. I have a question from someone whose PPP is a little bit in limbo now. Neil, it says, my PPP loan was approved by my bank. They have been waiting for the SBA loan number. Does this mean that I'll get the loan regardless of the fact that recent news states there's no more funding available?
So if your bank has not received back from the SBA that loan number, they can't disperse the loan. So, hopefully that loan number is in progress. You might want to check back with them depending on when you last talked to them to find out if they've gotten that loan number. But the key for the bank is they have to have that loan number from SBA. And if you are not given a loan number from the SBA, if your application wasn't assigned a loan number before the program shut down, then you're going to be waiting for the replenishment of the funds for that loan to come through.
Okay. And another related question on forgiveness on the PPP. This person said they're aware of the 75% requirement for payroll. It says, I am more curious about the requirement of keeping the number of staff and their salaries as they were for 2019. Is there any leeway in those requirements for forgiveness?
There is some leeway. Remember, if you've already furloughed or laid off employees and you bring them back and they are on the payroll and their wages are restored by June 30th, you generally can qualify for the full amount of loan relief. Just remember, you're going to need some of those employees in those first 8 weeks to maximize the loan forgiveness, and then to avoid it being reduced because of the reduction in employee headcount or wages, you're going to need those positions, not the individuals, the positions restored along with the wages by June 30th.
Okay. We have sort of a difficult strategy question here. Maybe I'll ask Marilyn and Manny to take a look at this one. This is someone who owns a banquet venue, right? So anyone in the events business has just been absolutely clobbered by this. It says, my business will probably not be able to hold weddings, celebrations, corporate events, etc. until fall, if then. We were some of the first affected and we will be some of the last to go back to work. What hope do we have that we will get through this? What advice do we have for someone in that business?
You know, I think any business that's been dramatically impacted by this is one of the toughest things they have to do, is go back and revisit their business model. It's a hard thing to do because you were successful at what you were doing, probably very successful. Many restaurateurs moved to banquet because it was a better business model for them to follow. So the hard work that has to be done right now is, what should your business model be when you come out of this? Is that still something viable? If so, how can you hang on until it's viable again? They talk a lot about, we will come out into a new reality where social distancing in large groups may take a long time to come back. If that's true, if you believe that, are there ways you can pivot all your know-how, all your expertise into a better revenue stream for you, and perhaps one that's less disrupted? Because I'm sure you're disrupted by weather, depending on the part of the country you're in. So you're used to those kinds of disruptions, but ones that you could weather. The other piece is to look at, if you do pivot, those loans may not be as easy to get because we're in a tough time for the lenders. Obviously, they know the business is distressed. So you'll have to look perhaps to private individuals that can help you if you decide there's a new pivot. And just an FYI, the SEC has been working on relaxing some of the crowdfunding. So those that want small amount of equity through crowdfunding will find it a little bit easier to do.
Excellent. That's interesting to look into on the crowdfunding. Thank you, Marilyn. Manny, some advice for businesses looking for new revenue streams, new business models. How can they be thinking about this?
Yeah, and we actually work with a lot of businesses that are in this exact predicament right now. So I'm going to echo everything that Marilyn said. You know, as I've been doing my strategy sessions with them, just thinking about diversifying revenue, and that's really what it's about. You know, these programs, again, are great to get us through a small period of time, and absolutely take advantage of the programs that are available. Again, if the PPP and the EIDL are not available, take advantage of the other programs to give you that little bit of cash and save some of your cash on payroll tax deferrals. But it really is all about growing your way out of this. And the way you're going to do that is by diversifying your revenue. And by diversifying your revenue, you're going to create resistance against these sort of economic shocks that we have from time to time, because this isn't the first time something like this has happened, you know, where it's affected business, and it's not the last time. This, you know, something will happen again. There will be a shock to the economy that may affect your business. So you really have to resistance proof yourself. So we do that along 3 different channels. It's what I sell, who I sell it to, and how I deliver that. So the more you can diversify along those 3 channels, the better you'll be, the more resistant you'll be.
So David, if you, as Manny has suggested, are now asking your employees to do really significantly different jobs than you hired them to do so that you can pivot your business, are there also legal considerations around that?
Sure. I mean, the first is going to be training, right? I mean, we're in a new environment where social distancing is the rage. How do you train people in that environment? I mean, I have a lot of clients struggling with that. You know, using Zoom and those types of options to train is tough. You know, I think we're going to be in an environment where we're going to see a rise in discrimination claims. You know, older workers may not, you know, be as receptive in some cases to new tasks, and those frictions of trying to be fair and reasonable in the expectations that you put on employees that may have been very good in their jobs in your old line of business, but now they have to move over into a new line of business.
Thank you very much. We have an accounting question now about the Main Street Lending Program. If the answer is we don't know or we don't know yet, I want to hold on to it for next week. Neil, I'm going to throw this one at you. It says, will the Federal Reserve's Main Street Lending Program allow dividends to be paid to pass-throughs for tax purposes such as S-corps. Currently, dividends are not allowed in the program for corporations. What's going to happen with those? Do we know yet?
Well, in the interim rule, you cannot. And so that is a topic of discussion. We'll have to see if it changes in the final rules.
Got it. And we will probably be seeing some changes. We just don't know which ones at this point.
We know we're going to see some changes. We just can't say for certain which ones.
Okay. Going back to the PPP, we have a question about how salaries over $100,000 are reimbursed. So maybe we'll just talk a little bit, Neil, about how you have to cap those when you figure out what your payroll is. The question is, how are salaries over $100,000 reimbursed? Is it just the first $100,000 or fully reimbursed?
So both for your loan application and loan forgiveness, you count cash compensation only up to $100,000. You can still, per the Treasury guidance, health benefits, retirement benefits, other things that are non-cash compensation can be on top of that. But for purposes of applying for the loan and the loan forgiveness, cash compensation stops at $100,000. You get reimbursed below $100,000. You don't get reimbursed for anything above. Got
it. Thank you. This is a question about speeding up, hopefully, the PPP program. Maybe for Dan. This person asks, how quickly can additional funds get to the PPP program so that we business owners can pay our employees? We are a business that supports hospitals. Is there anything a business that's like clearly an essential business can do to speed this along?
With the funding having run out, the first step there is to get Congress to appropriate more funds. As far as for specific essential businesses receiving funds, the program is currently set up on a first come, first served basis. So it's unfortunately not set up to allow for essential services or businesses helping essential services take priority.
Excellent. Well, not excellent, but excellent answer. Thank you. I just want to remind people with the questions, we have a little bit of improvement here. If you want to direct your question to a particular panelist, we will try to take that into consideration, make sure they get to the right people. So thank you. Another question about the PPP, if there is more funding for the PPP loan program, as a single owner of an LLC, will I be eligible to receive funding? My bank said maybe. Neil or Marilyn, do you want to answer that question? Single owners of LLCs.
I don't know any reason you wouldn't be eligible. So you may be eligible as the sole proprietor concept of that, but I'm not sure why there was a differentiation there. Marilyn or Dan may have an answer on part of that of why that may have happened.
I can understand exactly where the confusion came in. I have a client who is a single member LLC and filed. He filed at the very beginning when the guidance was just coming out, and he got rejected because he had not included payroll records. So there was, and I said, another client at another bank, big SBA lender, got a different answer at a branch. And I said, that's because the front line doesn't know what's changed because the main office hasn't gotten the guidance yet. You were a little premature. But there is some confusion. Many people will see LLC and assume it's not a sole proprietor. They do not understand that for tax purposes, a single member LLC files a Schedule C. So everything we are talking about for the self-employed in the filing of a Schedule C also applies to a single member LLC, and they need to have that same. The other thing that's important that hasn't been talked about with that, unlike the payroll protection, didn't matter whether you made money or not as a company. You could apply for your payroll. If you are a self-employed or a single member LLC, if the bottom line on your Schedule C net profit is less than zero, you have nothing to apply for. You are not eligible. That's change. That's a significant change.
That is a change. Thank you, Marilyn. And Dan?
Yeah, just to chime in as well about the answer of maybe, you'll have to remember for a lot of the guidance related to this program, it's come out in waves. We didn't see information related to sole proprietors and independent contractors until April 14th. So a lot of banks just simply didn't have the information yet on how the specific guidance worked for scenarios like the one mentioned here. So I would go back to your lender. I would talk to them again now that we have seen additional guidance, and based on some of the comments that Marilyn made just now as well, they hopefully will have a different answer for you than maybe.
Excellent, thank you. And as you point out, and sometimes that guidance, not only does it come out in waves, but it comes out like literally the day before the program is supposed to begin. So people do not necessarily have the time to prepare from it as they'd like.
Right. Or in the case of independent contractors, sole proprietors, they were able to start applying for loans on April 10th, and we didn't see relevant guidance related to that until April 14th.
Right. Thank you. Neil, is there any talk of extending the June 30th date for the loan forgiveness for the PPPs? That's an interesting question.
There is. I think it's in its early stages, and I wouldn't make any bets as to whether or not Congress does that. But I do think that we're going to have this discussion. We are in the midst of this discussion of replenishing PPP. Then there's going to be a bigger, broader discussion about what programs need to be extended, whether dates need to be changed, whether we might need new programs. At the U.S. Chamber, we're very much advocating that we're going to need some new programs. For example, for that wedding and event business that you talked about earlier, they're going to need a longer bridge than maybe someone who's not in the events business. That's all going to be a topic of conversation, probably in May as we in earnest begin this reopening in this next phase.
So can you give us a little bit of insight into those conversations on like the pros and the cons of extending those dates, perhaps?
Well, the biggest con is that people were planning, and they built a plan around a June 30th date, and then Congress changes it again. Obviously, the pros around it is it gives more flexibility. Let's remember that this program, even though it's a month old in terms of its creation, ideation in Congress, the world looked a lot different a month ago. And so, it makes sense that we may have to change some of those things. I think the truth is that the world's also going to look different 3 weeks from now. And it's hard to say with certainty what changes Congress might want to make 3 weeks from now, other than we're going to have to all be flexible enough to adjust these programs and adjust our planning to reflect the reality of the situation on the ground.
Thank you very much. We have a question from Jesse, which is some good news, but a problem that comes with it that I think David is really well prepared to answer. This business says, we are one of the few that was approved for and funded on the PPL. Fantastic. However, we are having a very hard time getting our employees to come back to work. They are making more on unemployment, and there is no form to submit to say we offered them work. Is there any plan to help with headcount and for us to let unemployment know? Any guidance is appreciated.
Yeah, I think there's two issues there. One is the impact on PPP, which I'll leave to some of the other panelists here, and whether they will give any relief in terms of looking at FTEs as opposed to specific employees, which hopefully we'll have some guidance on that soon. In terms of getting people off unemployment, some states are better than others on this. Some states are more strict and do have records and paperwork that employers can submit showing that they did offer a job. I will tell you that many states, even if you do offer someone a job, that is not enough to disqualify them from unemployment. In many states, if the person says that I'm afraid to go back to work because of an underlying health issue or because of, again, age or one of the protected classifications, that's going to be enough to allow them to keep their unemployment. So this is something that's not going away, and employers are going to have to be wrestling with strategies of getting them back. Again, I think health insurance is the big one. Most furloughed employees kept their health insurance. That will end if they don't come back to work. It's going to be very hard to replace their health insurance, and in the middle of a pandemic, people are going to be nervous about that. So I think that's the big bargaining chip that employers have. Also keep in mind, they're still employees, which means they still have protections under the law. Just because they don't want to come back to work doesn't mean you can necessarily fire them. Again, if there's a medical reason, it may be a reasonable accommodation to give them some additional time. So that's something that employers are going to have to wrestle with.
If it is a medical accommodation, and we also have these new paid leave laws, David, how do those things work together?
Yeah, so again, they're on furlough right now, and under the Families First Act, it's very clear that they don't get to take paid sick leave if they are on furlough. So I think that's really not the issue as long as they choose to stay on furlough. If they come back to work, and again, sort of the nightmare scenario is that people come back to work and then, 2 weeks later, they decide I want to stay home and take care of my child who's out of school. And now you've just really shifted them from unemployment over to emergency paid FMLA. So, this is very complicated. It's going to be case by case and based on each employee's, really their own situation.
Excellent. Thank you very much. I think one of our earlier questions had to do with deadlines, and it seems like there is still some more confusion here. So Neil, when must funds be spent from the PPP? They're supposed to be spent in 8 weeks, but there is another deadline of June 30th. Will we be able to use the funds after June 30th? The delay in funding will push the ability to spend the money past June 30th.
Well, so I think the dates you want to think about are the 8-week date applies to your ability to have the loan forgiven. The June 30th date, this is a program that was supposed to run through June 30th. Obviously, we do anticipate that you may have loan proceeds, and by the way, all money's fungible here. You may have loan proceeds that you're spending beyond the 8 weeks, but the real deadlines that you have to think about are 8 weeks for loan forgiveness, June 30th when the program is supposed to end, but that doesn't mean that someone takes back the money from your loan.
This is a question, I think, for Marilyn. It says, what is the process for a sole proprietor to get assistance when receivables are cut in half due to the COVID situation? Marilyn, what would you recommend for that person?
Well, since the payroll protection is going to be based on their Schedule C, so they have to look at what their net income was. If they find that's not going to be enough relief for them and the EIDL loan does not come back, the next question is, what are the basic things they need to fund? And if it's a large amount, then would it be qualified for, perhaps they don't have receivables right now, perhaps they have got it, but what do they need to get started with their work? If it's under a very large contract, there are actually lenders out there that will lend against the contract. So look at what it is that you're looking to do to generate your revenue again. And then how do I fund that? If you have inventory sitting there that you simply need time to sell to generate a receivable, there are lenders who specialize in inventory. And this stuff isn't all cheap, but it's spot borrowing for just what you need when you need it. So look at what you have to do to generate that next receivable that ultimately will lead to cash. And are there specialized folks that can help you with that?
Excellent. Thank you very much. We have a question for Neil about a self-employed business. It was part-time in 2019 with either low income or loss. Sounds like they haven't finished their taxes yet, but in 2020 became a full-time venture. Can the Paycheck protection loan be based on the new full-time character of the business from January 1st to March 31st?
It cannot. So this is one difference between the way the PPP operates for small business employers and the way it operates for independent contractors and the self-employed. It is based off of, you had to have, as Marilyn said, positive net income in 2019, and that is the basis. There is not, there's not an option as of yet to avail yourself of 2020. There is one exception contemplated in the regs, and that is if you weren't in existence in 2019, they are intending to put out further guidance for someone who is in existence by February 15th, 2020. So if you were in that very narrow window, there might be an option, but in the situation you described, I don't think there's an issue. Marilyn may have a different take on that, though.
Yeah, Marilyn?
I do have a comment. The assumption when you read the final rules that came out, and they're very clear in the rules, they're assuming that the self-employed operate out of their home, their car, or their shed. That's a direct quote. So those businesses that are self-employed that are significantly larger, and many of them are, they're going to have trouble fitting into the understanding of what the self-employed need. There was even some wording in the guidance that said they don't want to have a windfall. So some of the questions you will find are very different. And that's part, Neil, to your point about continuing these conversations. Hopefully we can begin to get those who design the program and fund the program to understand that not all small businesses are the landscaper who has one truck and a mower. These are significant businesses with far more complex needs, and they will give us more flexibility for them.
Thank you, Marilyn. So our last question, I'd like to ask everyone on the panel to answer it, and then I will finish up with Neil. And it says, could you please speak to your level of optimism that the second round of something like the CARES Act, so perhaps PPP or EIDL, are going to be further funded? I thought that we've talked about this, but obviously we haven't given it enough attention because this person says this is probably the most important question for many of us. Thank you. So Marilyn, do you want to start? What is your level of optimism that we get these things funded again?
I'm optimistic that something will happen. There is so much pressure to do this. Something will happen. Will it be useful for the rest of the business, particularly, and since much of this was geared at getting us through the shutdown, how useful will it be on the recovery? And that's why I would ask the people who have that question to start speaking up with their stories so we can begin to inform Congress on what we will need for recovery.
Thank you. David, how optimistic are you for further large-scale relief for business owners?
I think we're going to see a lot of different options being put forward at every level. I think the federal government's going to do more. I think state and local governments are going to do more in terms of both employers and employees. And again, I think employers should be prepared for more employment laws that are helping employees as well.
Great. Thank you very much. Manny, what's your outlook?
I agree. I'm optimistic that there will be more money. And again, just keep in mind that there are other programs that are available. But for the PPP, certainly, I'm pretty optimistic that there'll be more money for that.
Excellent. Dan, what are you saying?
Yeah, I'm optimistic. I think there will be more money for PPP, and then I think Congress has at least 2 more bills coming in the form of relief package. You have a quote unquote phase 4, which will help us get out of coronavirus, and then a phase 5, which will help us jumpstart the economy. So I'm very optimistic on those.
Thank you very much, Dan. Neil, what should we be looking for, and how optimistic are you that we're going to see it?
I'm highly confident that PPP is going to be replenished. I'm a little less confident that EIDL will be replenished. I think it could be a little further delay. I think there will be additional assistance. I think one of the things, to Marilyn's point, that we have to do is to make sure that we help Congress come up with an assistance package that's going to meet our needs through this phased reopening. And so one of the things we've done at the U.S. Chamber is we've started that conversation on return to work with a document called Path Forward. And so you can check that out. And one of the things that we raise is how we help businesses who are going to be some of the last to return to opening and to full profitability. We have some ideas on that, but I would love to hear the ideas that our listeners have. Share them with us. There's a way to do that on our website, and we'd appreciate your feedback.
All right, thank you so very much, Neil. That brings us to the end of today's event. I want to offer a big thank you to Neil Bradley and the team at the U.S. Chambers of Commerce, to all my colleagues at Inc. who have worked so hard to make these town halls possible. Thank you. And of course, to our panelists. Today we had David Barron, a member of the law firm Cozen O'Connor. We had Manny Cosby, the president and CEO of CFO Services Group. Marilyn Landis, the president and CEO of Basic Business Concepts, and Dan Martini, the vice president of Congressional Relations and Public Policy at the American Bankers Association. Thank you. I'd also like to thank Salesforce for their support in underwriting today's town hall and the crucial information that we were able to bring you today. We will be continuing to follow all these issues closely at Inc.com, so please check Inc.com for more updates and coverage. As always, it is a pleasure and an honor for all of us to do everything we can to support our small business and our small business community. Thank you for spending an hour with us. I hope that it has been helpful and productive to you. I hope you all stay healthy and enjoy your weekends, and we hope to see you back here next week. Thank you very much.